Welcome to TradeTheMBI.com. This is John. This report is for the 26th, and well, we ended up with another continuation, moving right in the direction of the shakeout. And it's interesting because now you see that we did get a dip below the other day of the orange below the red, and turning around at the same time. We also have shorts completely fading out of the situation, so it's going to be a little harder for the market to push higher because now short covers pretty much completed itself, and new buyers have to push price continually higher here. So you probably have to look for gaps in this particular case to get the kind of push that would normally continue things. We're also seeing, even on the NASDAQ, complete overbought with the positive red on the extreme histogram, which lets us know that that's where the retrace will come to. First, we'll start with the lows right there, and boom, back here. You're also getting way ahead of the ABM, and often the further you get from those, it's just a mean reversion. I mean, you have the Bollinger Band situation where you can go to the outside, then it returns to the middle, and often goes to the bottom at that point. Can't say the same thing about ABM because you can get these parabolic moves. They continue for some time before they reverse, and obviously we usually see that with the steel reversal or move below the steel of the below the Silean, and that gives us our crossover for sell signal. Euro obviously breaking out to new highs and right in the range. Gosh, I think I'd have to shrink this quite a bit to get back to the other line where we can do it, because it's been so long that we've not been in the range. There it is, all the way up there. High side right around that 115 range. That just shows you how far back you have to go, and that's like well into last year that we were even close to it. But we spent most of the time in that range. It was only when Euro fears. Now, we still haven't talked about Greece or any of those kinds of potential dangers. Everything has just been about France and where that is, and so that's provided some. Not to mention, you're also seeing continued weakness in the U.S. We haven't seen that growth, but this craze move, which began with the push right here, has been retraced as expected. Once we got to the plus 13.5 right here, ended up with a secondary one, and we started breaking down below everything, and we would expect that to normalize and start to move back lower, particularly since inflation is seemingly reported as being within guidelines, but it appears that it's a little bit more aggressive than that. Now, obviously, low energy prices, it's a double-edged sword. It's a weak economy with lack of interest and also a huge amount of supply. Now, when we get to that number one, we often get that oversold spike reaction, which is exactly what we got. Still doesn't mean that there's a sustainable move at this particular point, especially with orange right there in the middle. It hasn't moved below or anything like that, so I would expect that we're probably going to see some more sideways. It just got pretty far bent as far as extreme, and it just wasn't. The fundamentals just don't support it. Gold in this little retrace is just backfilling positive extremes, is now complete. So we would look for a new setup. Unfortunately, it's still within a little bit of a sell signal right there. At least for gold, though, we'll be able to see a spike up of the short-term buyers in steel and some kind of leveling off at this particular point. Doesn't look like that's at this spot just yet. So we'll have to let that work. This has been a major excitement period. We're still getting consolidation within this up move. How much of this has got to get filled back in? Well, quite a bit of it. So a lot of euphoria within that. But again, even when that happens, you're still going to be coming from record levels. So not particularly a horrible situation from that standpoint. So we'll continue to follow, the intraday setups here, but we do have the likelihood of a little bit more retrace built into this. We are seeing a reset on the 5K, which means we could be testing pre-market those highs again overall, but I think we're probably going to be looking at some softness as we absorb the massive move that's taken place so far, and then see if there are any new fundamentals that would suggest that we're going to continue. But we're right in pace with our expectation that eventually we're going to get to that 2450, 2500 range, and then we'll make a reassessment as to the next target from there. At that point, we might be getting to lofty levels unless we start to see some real changes in the underlying economic numbers, and we'll start to capture that elsewhere in some of the other readings. So, as always, trade well. We'll talk again later.